Guys, today I want to talk about the relation between market cipher and vector candles. Okay, now I've used the terminology seemingly out of nowhere quite a few times during my live streams. So if you've been around the live streams, you would know. But this seemingly out of nowhere terminology that I have helped me actually take this short trade this morning live on the YouTube channel. So I want to talk about why I was fairly confident, what I was looking at, and how we can use vector candles to add confidence with what we're seeing on market cipher. Now, I'm not going to go crazy in depth on these vector candles because I have a playlist already. So if you don't know what vector candles are, I highly recommend you go click here or go click here, whichever side it's going to be on, and go watch that playlist and come back to this video because you're going to need to know a little bit about the vector candles. But today I want to specifically talk about this seemingly out of nowhere. And it's one of my market cipher tricks that have helped me actually become, relatively consistent using this indicator that I believe is the only indicator that you need. So when you have this seemingly out of nowhere move, okay, you will typically get vector candles that go against the idea that market cipher is showing you. What do I mean by that? So here we're on the 15-minute time frame, and we're going to use this example because this example literally hit 2 hours ago, maybe when I was on live 2 hours ago, and it actually worked out perfectly. Okay, now this seemingly out of nowhere, if you have red money flow, okay, if you have red money flow, remember your money flow acts as a filter as to what price may or may not do next, right? When you have thick red money flow, you're going to think the thicker the money flow, the more chances of divergences. This is one of the many market cipher rules that I have created. And so if you have thick red money flow and then you get this pump out of seemingly out of nowhere, that is typically going to be a fake out move. Now, this video doesn't need to get super technical. We don't need to talk about the Brinks box. We don't really need to get super in depth with why the market makers are doing these moves, etc. But what you do need to know is whenever you have thick red money flow or thick green money flow and you get a move out of seemingly out of nowhere, 9 times out of 10, that move is going to be a fake out, especially if that move comes into a nice confluent zone, which we add here on the chart, and our signals and our vector candles are present in the chart. So let's go over it here. Right now, if you take away the vector candles, all we have are the white and gray vector candles, okay? And I say it all the time, guys. Every single person should be using vector candles. It is like having goggles that can see through clothes. It is a hack, and I've said that for months now. Okay, so when you are blinded right now, you don't have these goggles that could see through clothes. You will just see a bullish pump, okay? And the majority of people will long this pump, and they will put their stop beneath that low, even though we're at the range low, and we had this liquidity that we could come and grab as well. The majority of the people will do that, long it, expecting to come to the range high, but we're not the majority of the people. We trade using an edge or trying to build an edge, and we can do that using these vector candles. So we already know that the thicker the money flow, the more chances of divergences. Yes, you can absolutely 100% argue that we had bull divs at these lows, right? You can see we very clearly had the bull divs here on the lows. However, what did I say in the beginning of the video? The thicker the money flow, the more chances of divergences. And your red money flow being thick is an indication that we could come lower. Your money flow is your filter. So when you come down to a low like this and you haven't taken the low and you keep in the back of your mind, the thicker the money flow, the more chances of divergences, and we haven't swept that low yet. And then all of a sudden you get this massive move and you're like, wait, hold on a second. Geo said the thicker the money flow, the more chances of divergences. Why didn't we get that divergence? You need to make sure that you have these vector candles on in your chart, especially if it's during a high liquidity moment like New York and New York in the morning, understanding that there's a Brinks box play here. I'm not going to get too technical with that, but understanding that fake outs happen in New York all the time, you got to be watching out for this seemingly out of nowhere. So what is it? Well, you have red money flow, and then you just put in another divergence. This move came out of seemingly out of nowhere because you have red money flow. So why did we just all of a sudden out of freaking nowhere pump 2% in however much time this was, right? 40 minutes, 45 minutes. Why did we pump 2% if money flow is in the red and we never swept the liquidity on the low? And we know the thicker the money flow, the more chances of divergences. Why on earth did we just out of nowhere pump 2% to the upside. And this is how you need to look. This is how you need to think. This is how you need to approach the market. This morning on stream, when this happened in real time, I was like, okay, somebody was saying that I'm a perma biased, and even though I'm a trader and all I do is short. Well, I mean, we're in a trade setup. We're in a short trade setup. I'm not looking along here. But what I will tell you is that we came up to a nice order block. We came up to a 2-hour order block. Okay. This obviously works better at key zones because market makers will send price against your normal idea or against what you think to mitigate key zones. Okay, so we had a nice 2-hour order block that had not been mitigated prior to us getting this move out of seemingly out of nowhere. And then we started to form these bearish spike wave divergences. So if I remove the RSIs just so we can clean up a little bit, after getting this 2% move here in a few minutes, you can see very clearly that even though we put in that bull div, remember, money flow is your filter. So you shouldn't be looking along while money flow is getting thicker like this, because you should be expecting the thicker the money flow, the more chances of divergences. And we hadn't even taken that low yet. So right after we got these seemingly out of nowhere moves, we started to get this bearish spike wave divergence. And there was a lot of confluence in this red order block. So long story short, for the ones that don't know what the vectors are, it's basically market maker manipulation, okay? Whenever you see green vectors or blue vectors to the upside, it is market makers limit shorting against you, retail, who FOMO market longs, okay? So what happened here is, like I said, people probably saw the RSI divergences. They probably don't have market cipher. They probably don't know the thicker the money flow, the more chances of divergences. Clearly, they're not subscribed to my channel. And they probably FOMO longed here because, oh, the ETF, the ETH ETF, Trump is talking on Saturday, so we're going to 100K, whatever. When in actuality, this was your Brinks box play from this morning. They gave you this push up out of seemingly out of nowhere. And the reason we were able to identify the fake trap, the false move, is because when you have your red money flow and you remember the thicker the money flow, the more chances of divergences, and you see this fake out and you get this move out of seemingly out of nowhere, and it's confirmed with your vector candles. Remember, your vectors are market makers limit shorting this whole way up. Why are they limit shorting? They're going to have to realize a return on their profit. We trade alongside the smart money. We trade alongside the market makers. So when they're giving you a move like this out of seemingly out of nowhere, and you see these vector candles and you jump down, and we were talking about this exact moment in real time on the 3-minute time frame, we were getting spike waves as we came up to this order block that had a lot of confluence. You can confidently say, wait a second, the money flow is red. This move is seemingly out of nowhere. Maybe this is your false move. And you can use the vector candles with additional confluence to not fall for these traps, okay? These are absolutely traps that market makers send all the time. This happens literally all the time on all time frames, okay? And it's very simple. Most of the time, the majority of the time, when you see vector candles, you need to know that your vector candles can get recovered, and they are usually going to get recovered. That is why we do not short into red vector candles, because we know that retail are market shorting into those retails and into those red vector candles. And we know that in a red vector candle, your market makers are limit longing. So we do not trade against the vectors. We trade towards the vectors after the vectors have printed. Okay. So that was this trade idea. Where could it go? Well, I mean, we were targeting the low, which we already hit. So stop loss hit, stop loss, or stop loss hit rather. TP hit, stop loss is at break even now. One of my other rules are whenever you have a red dot, you got to look to the left and say that these green vectors can get recovered. So I am expecting potentially a further move to the downside. So I took my profit and I'm holding it. But I already knew that we were in resistance, and I already knew that this move was a little bit weird this morning because it happened out of seemingly out of nowhere. And if you look here as well, look at this, right? You had red vectors to the downside. Those vectors got recovered, came back down, had a move out of seemingly out of nowhere into this order block that was mitigated, that had inducement. And, sure enough, the rest is history. How far down can we go from here? Well, really, the target was this. Target has now been hit. So anything in addition to that is a gift, but that is all that I got for you guys today in this video, primarily because my screen froze and I don't know why, and I can't do anything else with it. But the information is there. The information is out there. The next time you see a pump out of nowhere, I need you to ask yourself, was this move seemingly out of nowhere? And if it was, please proceed with caution. Guys, if you like the content, make sure to hit the like button. If you love the content, hit the subscribe button, because as I mentioned in this video, oftentimes I go live and I live scalp on YouTube. And if you don't have the notification button hit, then you're not going to get the notification. And you may have been, and I hope you're not, but you might have been the people that longed into this move that happened seemingly out of nowhere. Guys, I'll see you in the next video. Take care.